Welcome to another episode of Growth Hacker TV. I'm Bronson Taylor, and today I have Matt Berry with us. Matt, thank you so much for coming on the program.
Thank you for having me.
Yeah, absolutely. Now, Matt, you are the CEO of Freelancer.com, a little site that people might have heard of. It's kind of the eBay of outsourcing. And usually I give some accolades of our guests, at the top here when I bring them on. If I were to give all your accolades, there wouldn't be time for an interview. So I'll just mention a couple of them.
Okay.
You were named one of the 100 most influential engineers by Engineers Australia. And you've been named one of the top 10 Australian entrepreneurs by Smart Company, and a million other things that you've done that's pretty awesome online. So we're really grateful to have you. So thanks again.
Anytime.
Yeah, so let's jump in here. Let's talk about the story of Freelancer. This is a story with a lot of twists and turns, and it ends with a big win, so I like the story. What year did Freelancer launch?
Well, what we did was we actually consolidated about 13 businesses in the space. So about 2007, 2008, I had left my last company where we built semiconductors, a very complicated product. And I was looking for something to do next. And I was helping a few people with a few little web projects that were going on. And in particular, what I needed done is I needed a bit of data entry done. And it was filling a spreadsheet with about 1,000 rows of information. I needed a name, an address, a URL, an email address, and so on. And I was trying to get like a little brother or sister of a friend of mine to do the job because I thought, maybe I'll pay them $2 per row. It was 1,000 rows, $2,000, and some little kid would love to do this at home, working at their own pace and make a bit of pocket money. Mm-hmm. It took me months. I mean, I'd 4 or 5 months later, I'd find someone, they'd do a few hours work, then they had soccer practice or exams or whatever it may be. And I really gave up in frustration. And for that sort of job, like a small project like that, you can't really place an ad in a newspaper or a traditional job site. There was nowhere really you could go. I mean, this is about 2007, 2008. So in frustration, I went to the internet and I typed in, I think, something like cheap data entry or data entry online or something like that. Mm-hmm. And I came across a site called Get a Freelancer. And this was a site that had been running since 2004. It looked absolutely terrible. It looked like Craigslist. It was all in grey. I make a joke saying it was painted in paint left over from the USS Midway. It was just a really, really horrible, clunky-looking site. The English was terrible on it and so on. And I looked on it, but it looked like there was a lot of activity with people doing small jobs. Anyway, I posted a job and walked away and forgot about it. Literally forgot. Went and had lunch. I came back and I had 74 emails in my inbox. I'll do it for $2,000, $1,000, $500, $400, $300, $200, $100. And I thought, oh my God. I thought, it's taken me months to try and find someone to get this work done. Mm-hmm. I can't find anyone locally. And all of a sudden I have 74 emails from people all around the world wanting to do the job for substantially less than I was actually willing to pay for it.
Yeah.
And I thought to myself, there's no way that someone will actually do this job for $100. So I just hired them. They went off and did it. It was a team in Vietnam. It was done in 3 days. It was perfect. And I just thought to myself, oh my. The first thing I thought was, as an entrepreneur at home, just working as a one-man band at that point in time, just trying to do a few things, I thought suddenly I can hire an army on a credit card. And this is amazing. I could just sit at home in my armchair in my underpants or whatever and just come up with crazy ideas and just get people to do things for me. I thought that was just a dream come true for me, right? Because I mean, my last business I had about 100 employees all around the world, etc. It was
the exact opposite of this.
Yeah, exactly. It was quite different. I could just tell people what to do because they were full-time employed. But sitting at home, just trying to get things done, it was always so painful because I can program, but I'm not a graphic designer, right? I can come up with a business plan, but I can't do something else, and so on. So that was my first thought. My second thought is, gee, this space is going to be huge. I thought it just solves. It's when you have a painkiller versus a vitamin. Vitamins are kind of nice to have, but painkillers are things that really solve some pain. For me, I thought to myself, there must be so many other people that need a service like this. This is just going to be a huge space. Mm. And then I thought to myself, why isn't there an eBay of jobs? I mean, there's an eBay of products. There's global marketplaces of products. Isn't it pretty obvious there's going to be a category which is going to be a global marketplace of services that will be huge?
Yeah.
And then I thought to myself, why hasn't eBay done it? Right? Mm-hmm. And I think, I thought, I was a founding team of one, and this is the hardest thing you'll ever do, being one person, because when you've got a team of 3 or 4, you get up in the morning, you maybe go meet at a co-working space, or you maybe meet in the office, or even in someone's garage, and you've got other people there to kind of push you along. If you're having a down day, they kind of bring you back up, etc. But when it's just by yourself, it's really, really tough. And when I was out there telling people, look, did you know you could go online and you can get through a website, you can get someone in Bangladesh to go build design a logo for you, build a website for you, design a mobile app for you. Back then, the people's responses were very different to today. Today, people think, oh, it's obvious, it's a global marketplace, the internet's global. You get anyone from around the world to do something for you. But back then, it was like, someone in Bangladesh. Where's Bangladesh? Do they speak English? Do they have computers? It was just, and I think Peter Thiel coined the term "big uncomfortable secrets," right? And he said that anywhere there's a big uncomfortable secret, that you can actually see the answer to, what the secret is, and other people don't, there's potentially massive opportunity, right? Massive opportunity. And the big uncomfortable secret back in 2008, which was really just staring everyone in the face, was the fact that there are 7 billion people on the planet. There are 5 billion people out there about to join the internet, and the other 5 billion people live on an average wage of around $10 a day or less, substantially less potentially. And they're just like you or I, right? But they're what I call PhDs, poor, hungry, driven, right? They are hungrier, they're more driven, and they want to work harder than we do, right? And they're just as capable, if not more capable. And that was really the big uncomfortable secret that, in 2008, in hindsight now you go, well, of course you could get someone overseas to do a job for you. But back then it was actually, people really struggled with that concept.
Yeah. I love that phrase PhD, because I think we underestimate how little it takes to get a lot done in terms of money.
That's right.
You can build an empire on a few bucks, like you said, on a credit card. Now, here's what I'm interested in. So you saw Get a Freelancer, and you said you consolidated that and a handful of other companies. Most entrepreneurs build something from the ground up. You said, I got a shortcut. I can consolidate these and hit the ground running. What made that possible? Was Get a Freelancer just not monetizing well, and you could come in and buy it at a good price and consolidate it with others? Because you did it in such a different way. I'm interested in what insights you had there that made that happen.
Yeah. So part of it was really me lacking a bit of patience. You see, I just run a semiconductor business for 6 years. And so designing semiconductors is about as complicated product as you can think. This was a chip that ran at gigabits per second on network traffic. You had to design it into network hardware. We had hardware engineers. It was a really, really complicated product. And so, after walking out of that business, which, ironically only a few months ago sold to Intel, but, we're talking 13 years after I sold it, I was thinking about what I was going to do next. And I didn't really have the patience to kind of go out there and make that first $1 million in revenue, because that first $1 million in revenue per annum, that's the hardest $1 million you'll ever make in your entire life. Once you get a business to about $4 or $5 million in revenue, it becomes more of an optimization research problem. You've proven that there is a market. You've proven that customers will buy eat the dog food, right? And it's really, then you can do things like conversion optimization, funnel optimization, turn all the knobs and dials, and really just start amping it up. And if you're kind of really methodical about doing that, then it's a lot more straightforward than that first $1 million, where you're really just proving out, will the dogs eat the dog food? Will people buy the product? Will they buy the service? So what happened was, I thought to myself, okay, this space is going to be huge. I need to get into it, right? So the first thing I did was I started writing my own site. So I started the traditional thing that entrepreneurs do, which is you develop from scratch some code. So I wrote built a website called bititout.com, right? And this was basically a clone of Get a Freelancer. And so what I was doing was I was hiring freelancers on Get a Freelancer to copy Get a Freelancer, right?
That's awesome.
Because I could write the code, but I couldn't design the graphics or do the icons or things like that. So I was kind of getting people to kind of help me kind of copy the site. And it's funny today because actually every couple of projects on Freelancer is actually cloned freelancer.com, and you kind of see
great.
it.
I love it. It's so meta.
Yeah, exactly. So. And Get a Freelancer itself was a copy of Scriptlance, which is a company I later on bought. And it's actually funny because when I bought Scriptlance, I was actually going through the projects and I found the original project where it said clone Scriptlance to build Get a Freelancer. So it's all Inception.
Exactly. Right? This is better than Inception.
So I wrote my own site, and I downloaded Social Engine, which is basically a white label Facebook in a box as my starting point. So I wouldn't have to do a lot of the core functionality, and then kind of I hacked together like a classifieds module to kind of do the auction marketplace. In about 2 weeks, I had a basic site going where I could figure out really the business model and how it worked, and kind of just get a feeling for how to operate the business. And I started getting some customers in and so on. And then I did a bit of a survey of the space, and I wrote a bit of a business plan. people say today, in today's day and age, don't write a business plan. It's completely useless. That's the old way of doing things. You give it to a venture capitalist, et cetera, et cetera. But, a business plan is actually, you write a business plan for yourself. You don't really write it for someone else. You write it for yourself to just coagulate and get your thoughts together and really understand what's going on. And one of the best things I do when I think about starting an opportunity is I do a back of the napkin exercise. And how do I make $1 million? So what's the average cost of the product or service? How many customers do I need? What's the gross margin look like? How rapidly will they buy? How often will they buy, et cetera? And it just takes, it's amazing how many times entrepreneurs don't do this, right? You take the time to sit down for half an hour and just figure out how hard is it really for me to make $1 million? How many customers do I need? Does that make sense?
Yeah.
Because then you get a sanity check of, is this a business that if I think about then the organizational requirements to deliver that $1 million in revenue, do I need like 1,000 staff, or can I actually do it with a small team, right? Does it actually, do I need to, how much capital do I need maybe if I'm selling a product? So, it really takes a lot of, you get some huge benefit from just doing that back of the napkins of calculation. So I did that, and I kind of thought to myself, okay, I've got a feeling now for how much money I might need to raise from venture capital to go start the business. And then I looked out there in the space, and the space at that time was incredibly fragmented. You had about a dozen companies that had made some progress in the space that started probably as early as 1999, but hadn't really set the world on fire, right? A couple had raised a bit of venture capital, a lot hadn't, but a lot had been in the space for maybe 4, 5, 6, 7, 8 years. And then I thought to myself, and then there's hundreds of little guys. There's hundreds of little guys who are starting all the time. They kind of come and go, and so on. And I thought to myself, no one's really going to fund me at this point in time to be the 14th major entrant in the space, right? And I was also quite impatient to get that first $1 million in revenue, right? So I thought to myself, maybe I need to buy rather than build. Maybe there's a way I can kind of acquire one of these sites for less money than I was going to go raise to start a business from scratch. So I just simply contacted a number of guys in the space. I contacted about 4 of them, I think, and asked if they would be interested in selling. Of course, everyone kind of said yes, because it all depends on price at the end of the day. And ironically, Get a Freelancer said, we're currently in due diligence with 4 other companies. We are interested in selling. And I said, well, just send me the information you've sent them. So I looked at the information. It turned out 6 companies were in due diligence at the time. So a couple of the competitors were in due diligence, as well as some big internet companies, including some listed ones. I won't mention their names. And I thought to myself, wow. And I asked him how much money he wanted for it. I thought that's a pretty reasonable price. And I said, okay, well, I need to jump on this. So what I did was I got an option agreement in place. And I just wrote up an option agreement myself. And I said to him, listen, this is the way it works. Either you get the price that you want within 45 days, or I'll tell you what, if I don't get the money together, I'll help you sell to the next guy for twice the price, right? And for him, that was kind of win-win. It's either he gets the money he wants in 45 days, or you get someone to help him. So I went out there and I basically just tried to raise the money, and that was very difficult because traditional venture capitalists, they don't really. It's like a management buy-in of an early stage company. Usually, management buy-ins happen of late stage companies. You'll have a listed company in the stock market doing $1 billion in revenue. The management team thinks they can do a better job. They go to a private equity firm. There's a management buy-in. The management thing gets cut into the deal, etc. So I was trying to close the deal on 2 sides. So I was trying to close the deal with the investors, and I was trying to close the deal with the vendor, right? So let me tell you, it was the hardest thing I've ever done, and all the while the clock is ticking with the lawyers, so the legal bill's getting higher and higher and higher and higher and higher. I would wake up some morning and I just go, Jesus, what am I doing? This is kind of the legal bill's into the 6 figures at the moment. Nothing's happening. The deal's going to be off. It's like it was completely nuts. But at the end of the day, if you're going to be an entrepreneur, you got to take a risk to get a reward, right? I mean, no one's going to come and hand you a future on a platter to you. So if you got to take the risk sometimes, and sometimes I'd left my last company. I hadn't made any money out of it. You kind of feel like you're at rock bottom. But when you're at rock bottom as an entrepreneur, it's the best place to be because you can take all the risks you want, right? And the worst thing that will happen is in 2 years you'll be in exactly the same place as you are now, right?
So it can't get any worse.
Exactly. I mean, it gets harder in life as you kind of get married and have kids and mortgage and a house and this, that, the other, and a dog and a picket fence and whatever. You have all these responsibilities, but you can take risks, when you're younger. But anyway, so I went out there, and eventually it turned out that what had happened is I'd gone to this guy. I thought as a founding team of 1, you've got to build some credibility in the team, right? Because it's really hard to be a founding team of 1 unless you've got this huge track record. And I had a bit of a track record, but it wasn't stellar track record. Like my last company wasn't sold for a lot of money. The last company was still pottering along, trying to build up a business. So I went to a guy who had just sold his business to Symantec. He'd sold PC Tools, anti-virus company, to Symantec, and he made a lot of money out of that. But I didn't actually click he had made a lot of money. And I just knew him because we were trying to put his software on our chip and supply it to people. So I said, look, you've sold a company in the space. You've built up a big consumer internet company. Do you want to just go on the board of directors? I've got these investors that are potentially pitching us term sheets. I want you to bring you along to the meetings. Mm-hmm. So he came along to the meetings, and of course, the investors were more interested in, rather than funding a small early stage deal, like, oh wow, $300 million exit. How about you come onto our fund as a limited partner? And eventually, he got frustrated. He said, "I'll just give you the money." And I said,
awesome.
"Really?" And so he gave me the money. He's the major investor in the business, and I managed to acquire it. And let me tell you, it's really interesting seeing. I mean, it's been a massive turnaround business, right? Operation. One day I'll probably write a book called Big or Growth or whatever, where can I talk about all the steps we took to kind of take it from where it was at the time. It was doing about $1 million a year in revenue to where it is today, where we're listed on the Australian Securities Exchange with almost a $500 million market cap. But the very, very early days were, I mean, the site was horrible. It was in all these greys. It was clunky. The English was terrible, etc. And the first thing I said was, well, let's just try and spruce up the graphics a little bit. Let's just kind of go from black and white TV to kind of not really color, but let's go to kind of maybe was it Panavision or whatever they call the old movies, Chroma Vision or whatever. So I got a friend of mine in New York to kind of just design a skin. Mm-hmm. And I personally went in there and I kind of just edited all the templates and kind of put the skin in. And you can go to the Wayback Machine. You can see how horrible it was in 2004. Ironically, the business started in February 4, 2004, which is the same day Facebook started. So kind of it'd be good if I was kind of running the business back then. It'd be quite competitive. But, so we kind of put some basic graphics in. And at the time, there was no staff. The guy I bought it from is actually a Swedish guy living on a fish farm in Vanuatu. So, crazy sort of guy. And it had 3 Ukrainian programmers, and it had 1 customer support agent for 500,000 users based out of the Philippines working at the graveyard shift for $2.34 an hour.
Wow.
And so, the Ukrainians were up in arms. They said, don't change it from black and white to color. It hurts my eyes. It's terrible. It's never going to work. There's all this Western thing you're doing. It's a horrible thing. So I went ahead and did it. And let me tell you, the first thing I did, which is really important, and everyone should do this, is whatever business you have is build a dashboard. Right, so what I did was I had some scripts, just had a cron job that was running periodically. I had an hourly cron job, a daily cron job, and a weekly cron job, and a monthly cron job. I'd scan put a query into the database, and I just using Canoe Plot, I'd plot a dashboard of revenue, projects, users. I'd start off with just the key drivers, right? And of course, I had traffic from Google Analytics. And so, because the important thing about that is anytime you make a change, you've got to measure the impact of that change. The worst thing that people do today is they do things like they change their entire website in one go, right? And some things are good, some things are bad. The good and the bad cancel out, and you get some sort of net effect, and you don't know where you are, right? Well, the methodology I've had all the way along is let's try and break down a change to some fundamental unit, make that change, measure the results, measure it in a statistically significant way. You can't just say it's up or down. You've actually got to look at it's very basic maths. Yeah. And Google Analytics will do the maths for you in the content experiments, right? Mm-hmm. And there's plenty of other tools like Optimizely and so on that will do various forms of A/B testing. But you make the change, you measure was that good or bad. If it's good, you keep doing that. If it's bad, you revert and you try again with something else, right? And you come up with ideas. So all the time you come up with idea generation, try a bunch of things, independently test each of those little things. If they're good, move forward. If they're bad, move backwards, right? Revert. So we just changed the graphics. We're looking at the stats, and let me tell you, revenue doubled straight away. And I could just
so you're telling me the Ukrainians didn't have insight there?
Well, I think we probably increased the conversion on the landing page from 1% to 2%, right? So it was something like that, right? It was that small, but it was just amazing because people would go to the old site, they'd look at it and go, "What is this? This is horrible," and they'd leave. Yeah. To okay. And let's say maybe some people would convert. So the conversion was still pretty awful, but it was double what it was before. Yeah. Now, all of a sudden, that went from $1 million in revenue a year to a $2 million run rate. Mm-hmm. And of course, All of a sudden, with an extra $100,000 a month, you can start hiring people.
Yeah.
So I hired, a couple of small engineers, et cetera, and I hired a customer support person, right? Of course, now customers get better customer support, so they're happier, so they use the site more often. You get bigger projects get posted, they come back more often, et cetera. And now I had some engineers to fix some other problems on the site.
Yeah.
And there was some other, there's a whole bunch of problems at the time. They, the business model was fairly similar to today, where it's a 10% commission on the work that goes through. But they had a thing known as a gold membership. And the gold membership at the time was $12 a month. But for $12 a month, your commission got reduced from 10% to zero, right?
Gotcha.
And so the thing was, 76% of the business was going through at 0%, right? So it's this giant washing machine on the internet where basically money would go in, money would go out, there'd be no revenue generated, right? So I said, that's kind of, people have had a very good run at 0%. We'll just make it 3%. And 3% is a very reasonable figure. It's still cheaper than the PayPal transaction for the most part.
Sure.
So we made it $9.95 instead of $12 and 3% instead of 0%. Of course, net revenue went up the next tick. I could hire more people. With more people, I could do more things, etc. And really, it was just this huge optimization problem at that point, because it was really just, how do I model the funnel? And everyone should know about, funnel optimization. Traffic converts to signups, converts to purchase products, converts to repeat customers, and you can break it down to little micro steps.
Sure.
And it was really just optimizing those conversion rates and just focusing just on grinding it out. It was just really just month by month by month, grinding it out. And I know a lot of people have a philosophy about our business where they say, forget short-term revenue, just think about the long-term, and so on, and just focus on that. And I've got a completely different attitude to that. I have no idea what's happening in 3 years, right? Or 5 years. The technology might change. There might be the whole landscape can be different, right? 10 years ago, there was no Facebook, for God's sake, right? Things change so quickly, right? And so, but I can tell you one thing. I may not know what's going to happen in 3 years, but I can tell you in 1 month from now, I've got a pretty good idea what's going to happen in 1 month from now. Yeah. We'll release this feature upgrade. The feature upgrade will increase the conversion from, 38% to probably 50% in that particular area. That will mean this will bump in revenue, which means this will happen. If you're methodical about that, and every little change you're measuring, and everything you're testing, and you're testing statistically significantly, so you know if it's positively good or it's bad, and you can move forward with the good, and you do more of the good things, and you do less of the bad things, and revert, eventually you get that. Yeah. Right? Eventually. And just grind it out.
Yeah. That is such an awesome story of just pure quintessential entrepreneurship. So first of all, you have to write that book called Growth. You just have to. I honestly think you're probably one of the original growth hackers before it was a thing. Before we were talking about it, you were thinking about business automation. You were thinking about, the things that growth hackers think about now. And that's why I think Freelancer, it is a step ahead of everyone else, where you've been optimizing for years already, and we're just kind of figuring out a lot of this stuff. So you have to write the book. And second, I would, tell people, go to freelancer.com, because when you look at it, you can tell it's the end result of a lot of data. When you go to it, it is so easy to use and so friendly and so precise. There's so much to learn just from, I'm sure, all the data that you've seen on your dashboards over the years that people can get a lot from just looking at how well and how easy it is to use freelancer.com. So there's a clinic just looking at the site right there. So let me ask you.
That's right. That's right. One of the biggest things I've done actually is the way I've structured the organization today. We have about 350 staff around the world. I've got 3 major teams. I've got the engineering team, which gets things done. I've got a customer experience team, which is really focused on 24/7 support in 15 languages to help customers. But then the magic in the company is the growth team. So I actually have no marketing people. I've got no sales people. I've got no advertising people. But what I've got this team called Growth, which now numbers probably around 35 to 40 people. And the type of people in that team, they're the sort of people you'd see in a quant group in a hedge fund. Math, stats, comp sci, physics, mechatronics, you name it. And the way we think about growing the business today is when we go on, we don't want to spend $1 of engineering time unless we're pretty sure we're going to make much more than $1 back. And so everything we do, we have a hypothesis before we do it. We say, we're going to do this feature because we think it's going to improve something. We don't just say, hand wavy, we make the customers happy. We say, we think the customer will be happier because this thing will convert better because they will have less confusion in the navigation or whatever it may be. And so then we go along and we do it, and we test the result, and if the result was good, and again, it has to be statistically significant, then we go do more, etc. So that team is really the powerhouse of the company, and really it's a blend of product strategy, it's a blend of stats, it's a blend of a whole bunch of different things, but it really is the new way of doing things.
Yeah, absolutely. And I love that you mentioned it's kind of like what you find in hedge funds, because hedge funds are the NASA of finance, and you kind of have the NASA of growth sitting inside of your organization. And it's such a unique mix. The kinds of people you listed off there, that's odd in a good way.
Yeah. Well, the thing is today is the way I see internet companies that get big really, really quickly. Really, it comes down to these growth teams, and they really are like hedge funds, because in a hedge fund, when you're investing, you come up with a strategy for investment. If you get in early and you get in fast, you can make windfall profits. If other people start copying your strategy, you get a thing called crowding, and when crowding happens, everyone loses, right? And it's a bit like that. I mean, the way I see the internet industry today is every year there's another platform that comes along that has 1 billion users. So it was Google, then it was Facebook, next it will be like Instagram or whatever it is, etc. And the guys who get in early and discover ways to advertise really cheaply or get to customers cheaply or get the viral growth happening in these distribution platforms. Because you got to remember, with 1 billion people on the platform, if you can really figure out how to crack and market your product or service, you get instant distribution to 1 billion customers.
Yep.
I mean, never before in the history of mankind
It's amazing.
could you distribute your product or service so quickly. So if you're getting fast on Google, and people like Demand Media did that with great organic SEO or SEM strategies, you can make windfall profits. If you get in early on Facebook, like Zynga did, right, you can grow extremely quickly. I mean, Zynga, founded 2007, financed 2008, over 1 billion in revenue 2011, went public, right?
Yeah.
You can make windfall profits really quickly. The problem is, after the first guys go in, then the tech companies start going in, you get crowding, and then ultimately small business comes in. And when small business comes in, they don't know how to manage their AdSense budgets. They don't know how to manage Facebook advertising. They've got a gazillion dollar CPA, cost to acquire customers like a gazillion, and they have no idea. And then you got crowding, and then no one makes any money, and then you have to move on to the next thing, right? So it really is a lot like a hedge fund, right? Yeah. When you come up with the strategies, right, just kind of get in there, hit them fast, and keep them to yourself, I think.
Yeah. Well, let me ask you about this too. You had a buyout attempt at around $430 billion. I'm sorry, $1 million. Yeah, you wish it was billion.
I'm taking a billion.
Yeah, you're Apple and you didn't know it. No, yeah. $430 million, and you turned down the buyout. And you ended up going public on the Australian Securities Exchange, like you mentioned. Yep. And overall, it was the right decision. It was risky, and some people were telling you not to, but it ended up being the right decision for you guys. What did you know to turn down $430 million? Because that takes some guts.
Well, I mean, you have to understand where we were as a business at that point. So we'd been running for pretty much 4.5 years. We were bootstrapped the entire way. So I didn't take any more capital in apart from some original capital to buy the first site.
Okay.
We've consolidated a number of businesses along the way. So we've taken out the competitors as we've grown. And the good thing about taking out a competitor is you don't just grow your market share, but you also take out a competitor from the mix. So I get it's a good strategy if you can get for the right price. But of course, you've got to weigh the pricing up versus your other channels for acquisition. But we got to a point where, we'd be running along. We had a bunch of term sheets all the way through from 2009 to 2013. We had term sheets from late-stage private equity guys and VCs. And even though they were in Australia and we don't really have much of a venture community, all the US funds, they're very active down here. They come down here all the time. Every quarter, they'll be down, scoping out, looking for opportunities. Because, they're running a business as well. And, with valuations heated in the valley, they've got to look elsewhere to find their opportunities, right? Because they're getting crowding in their strategy,
exactly.
Right? So they have to go elsewhere, right? And we're a very similar sort of economy, and so on. But so we had all these options. We could have sold the company. We could have taken venture capital. We could have taken private equity. We could have and so on. And then we had some guys that were looking at something for us, and they said, "Well, have you thought about listing the business?" And I said, "Well." It's funny you mention that because I do write a lot frequently on technology policy, and I have said that I think the future for technology investing will be the stock market, right? Because if you look at industries like mining, for example, if you've got a mining company and you're just getting going. You don't go to a mining venture capitalist on Coal Hill Road knocking on doors, running a business plan, and they get a convoluted preferred stock, deal that takes 6 months to negotiate, right? You just go to the market, you write a document, which is called a prospectus, which is an offering document. You lodge it, you raise some funds, you go, right? Likewise, if you're a multi-billion-dollar business and you want to raise $1 billion, you just write an offering document, and it's just you go. And effectively, this is crowdfunding equity.
Yeah,
right? This is all it is, crowdfunding equity from the general public, which is the way to go, right? But for some reason in technology, we've got this middleman, and the middleman's called a venture capitalist who kind of comes in there and, convolutes everything.
I've never thought of it that way, even though it's so true, though.
It is.
Yeah.
So I've written a lot about it, saying I think this is the future for the tech investing market.
Yeah.
And particularly in Australia, where we don't have a technology venture capital industry really, because they never really got to Series B. They had their Series A, they blew all their money, never got to Series B. So we never had an industry down here. But I thought about it, and then no one really wants to be the first, right, to try something new. Right?
You're not afraid, though.
I take risks, but whatever. But there was a company called Xero, Xero, and it's a fantastic business. It's a cloud accounting software business, right? It's now backed by Peter Thiel and so on. But it's absolutely going gangbusters. It's taking on Intuit, it's taking on MYOB, it's taking on all the traditional packaged software accounting companies, and it's growing like wildfire. And they went out and listed very early on a little market known as the New Zealand Stock Exchange, right? New Zealand Securities Exchange. And that went really well for them. And then they kind of went across the Australian Securities Exchange to get access to more investors. And at that point in time, they were only about a year and a half or so ahead of us in revenue. They were growing at a similar sort of run rate per annum. We were growing revenue at the time a little bit under 80% per annum, and they were, I think, spot on 80%. Their market capitalization was about $2 billion at that point in time, right? So the Australian securities market, it's the fourth biggest market in the world for equity capital issuances. In fact, more money was raised on the ASX in the last 5 years than NASDAQ, right? The only thing is, the only thing is it's mining. It's in mining and resources primarily, and there's very, very small tech sector. It's tiny. But there's a lot of money that's come out of the mining industry since the GFC or the global financial crisis that's waiting to invest in industries other than mining, right? And mining's great when it goes up and down. It's like the tech industry almost, but it's driven by commodities prices, right? So you can make windfall profits, you can lose a lot of money, it's highly volatile. There's a lot of money looking for something other than resources, wanting to diversify. And people had jumped into Xero because it was just a global play. There was nothing like it on the market and so on. And have you heard the expression, it's good to be a big fish in a small pond than a small fish in a big pond, right? Xero was a big fish in a small pond, right? If you look at the tech sector, I mean, these guys were, in New Zealand today, there's something like 6 or 7% of the entire index, which means every fund manager has to buy 6 to 7%. If they're an index manager, have to buy 6 to 7% of their fund has to be in Xero shares, right?
That's great.
So they're all buying the stock, right? When you have a lot of buyers and not many sellers, the stock goes up, right? And so they're like a rocket. I mean, their stock price is like a parabola. Recently hit a $5 billion market cap, right? I mean, it's absolute parabola, amazing business, global player. So I looked at that and I said, gee, I'd be happy.
Sounds like a good idea. Let's do that.
So we thought, let's take a risk, right? So we took a risk and we went down that path. And of course, the minute you kind of go on the process of going IPO, that flushes out a lot of people who might be interested maybe in buying your company and so on. So we had a few people kind of come to us and say, well, gee, before you do this, let's have a chat. Because they're all obviously afraid that the market will then price your stock at something it's going to be more expensive for them to maybe acquire you in the future. Yeah. Anyway, we went down the path. And let me tell you, as you're going down the path, you're stepping into the void, right? You're stepping into the abyss. You have no idea what you're doing, right? Because you've never done it before. But every step along the way, things started getting better and better for us.
Okay.
Companies started coming out saying, "Hey, don't go public. Come do something with us." Start getting more recognition. The press stopped writing about you as a startup and start writing about you as like a national hero of a company, right? Because we were saying, look, we're going public because all our companies go overseas to America. We want to keep them here. I want to build a world-class internet company that's going to be in the country. So the press, the whole tide changed there. And then we went public, and let me tell you, on the day it was pretty funny because Twitter was going public at the same time, and Twitter had that big banner of the Twitter bird on the front of the exchange in the States. And the Australian stock market wanted to do the same thing. So we have a big neon bird, like a giant neon sign, and that was the front of the Australian Securities Exchange. So we had that going. And, on the day that it went public, it was a very small offering. We only listed $15 million of stock. We kept it really tight on purpose to maximize success because we wanted to make sure, it was only 6.9% of the stock at the time, because we wanted to make sure that to try and maximize success by keeping as many fewer sellers as possible and maximizing the number of buyers. So it was absolutely phenomenal. I had so much interest. I can't remember exactly what the number was. Something like $300 million worth of interest in a $15 million of the stock. So, and I was just carving up the stock, trying to figure out who to give it to, who not to give it to. And I had some real rock stars, coming in at the float. And on the opening day, you had to go ring a bell at the market. And the issue price for the shares was 50 cents, right? So it was, because in Australia, that's what usually you issue between 20 cents and $1. I know in the States, you do it at a higher dollar value. It's just a perception thing of kind of how you divide the stock up. But down here, it's usually about the size. And I was trying to look on the screens where the stock price was going to cross, and I had to go ring a bell. And I had all the media there, and the cameras going. I felt like Justin Bieber for 5 minutes, right? Everyone was screaming and carrying on. And they told me the last person to float the company was an old Japanese guy who was so feeble on ringing the bell that he couldn't even hear it. So give the bell a good bash. So I was trying to figure out where the price was, and I couldn't see 50 cents, so I was looking for 65 or 80 cents or whatever, and all I could see was $2.50, right? And I didn't know what that was, right? Some other stat. And they go, that's the stock price. And they go, ring the bell. And I was like, so I rang the bell, and I actually broke the bell. I actually ripped
That's the way you do it, break the bell.
The dong a bit out, and the whole thing went off, and the stock actually opened up at $2.50, hit $2.60, so it was actually the biggest opening ever on the Australian Securities Exchange. It was up basically 5 times on open, 500%. It was 420%. And it was crazy. I broke the whole thing. The head of the stock exchange actually framed it, and he puts it on the wall with a picture of me breaking the bell, and he said, this is what new technology does to old technology. So that was pretty good.
That's awesome. Well, thank you so much for taking us through that story. I mean, if that's not inspiring, then you just weren't listening. That's awesome. Now, you also teach a class on technology value creation at the University of Sydney. And I want to ask you a couple questions about that as we wrap up here. What's the primary thing that you try to communicate to these young entrepreneurs? You have them in your class. They're starry-eyed, ready to do stuff. What is it you're trying to instill in them when it gets down to it?
We live in a land today of unparalleled opportunity, right? We're in a gold rush right now. I mean, Mark Andreessen said software's eating the world. Every single industry is being remapped and reshaped by software and technology that I can possibly think of, right? And there is just so much opportunity now to go and create businesses really quickly, really cost effectively, right? Companies are starting. I mean, Apple took about 8 or 9 years to get to $1 billion in revenue, right? Google took about 5 to 6 years to get $1 billion in revenue. Zynga and Groupon took 2.5 to 3 years to get to $1 billion in revenue. And then you've got things today like Candy Crush, King.com, Supercell, which are taking like 18 months to get $1 billion in revenue, right? And because the world's getting hyper-connected, right? There are 2.4 billion people on the internet, which means you could distribute a product or service to 2.4 billion people instantly if you can harness these distribution platforms like Google, Facebook, Instagram, maybe Pinterest, whatever. In the future there'll be many more of these things. So there's just massive opportunity. It's really easy to get going, and I mean all businesses today in some way, shape, or form are internet businesses. And it's really cost effective to build internet businesses, and that's why Y Combinator and Techstars, they'll fund companies 20 grand or 50 grand or whatever it is, because you can put 4 people in a room, feed them noodles for 4 months, pop out the other side, and then you can see if you got traction or not, right? And the traction is no longer the 1999 metric of eyeballs or whatever. The traction today is just revenue, right? You can really start a business and come out of nowhere, right? And the speed at which you can grow traffic. I mean, Pinterest went from nothing to the 16th biggest website in the US in a year. And it had more traffic than Craigslist. And I hadn't even heard of it until I got to
that site for girls.
So, people figured out the dark matter of the internet is women. Believe it or not, all these guys in Silicon Valley have been building products for other geeks who are mainly men in Silicon Valley. And actually, if you build a product or service for the other 51% of the world's population, maybe it might do some. Maybe
might have some possibilities there.
Possibility, just a possibility, right? So, and if you're young and you're broke and you're just coming out of school or university and you don't know what you're going to do in life, now's the best time to take a risk, right? Because what's the worst thing that's going to happen, right? You spend 2 years building a business and you're still broke, but you've had some fantastic experience in the process of it. And this thing gets harder and harder and harder to do as you get later in life and you have responsibilities and kids and so on. So it really is an amazing time to actually go out there and build a business.
Yeah. Now, as you look at those young entrepreneurs, every generation has things they kind of excel in naturally and things they just can't get their head around because of their conditioning. What is it that this new generation gets and doesn't get as you look out at them?
Well, I think, we have a lot of inertia being a bit older, right? Because I grew up like in a different world back then. When I was a kid, there was no mobile phones, there was no, computers went on every desktop, and I was pretty excited to get my Atari 2600.
That's right.
Console in 1979, and so on. And I think it's just a lot of it is just you're not bogged down by any of that. You've had a mobile phone ever since you were born. Right, it's just an extension of your brain. It's like effectively a mobile phone's like a neural implant, right? I mean, and it's going to go from here to Google Glass to in your head pretty soon, right?
It's going to be you.
Basically, it's an extension of your brain, and so people are just natural about how they interact with mobile and think about mobile apps. Think about software. Software's been around. It's been pervasive ever since some young guys have been growing up. So they just skip all the stuff that we had to go through and just go right through to the technologies of today.
What do they not get? What is it that they can't get their head around? Because I'll give you an example. Like when I hear your story, I don't see a young guy trying it because you acquired companies, consolidated them, you decided to get on the Australian Securities Exchange. Like you went a route that took grown man strength. You know what I mean? Like what is it they miss?
You kind of have to fail a couple of times before you can actually do well. I mean, this was actually my third, I guess, what I call a real company. And you learn so much from when you fail. Because anyone can hold the rudder when the sea is calm, but it's when the shit hits the fan that's when you really learn how to steer the boat, right? So, I've been through two businesses, and they one had failed, one didn't go so well, but eventually did sell, but not for a huge success. And you just learn so much from that. I just wish I did it. I call it my $30 million MBA because I raised $30 million in my last business, and it took 6 years. I just wish the $30 million MBA was like a $5 million MBA that took 2 years.
Yeah,
right?
Exactly. But you may not have freelancer if that's what happened. So
so if I didn't have that background, I wouldn't have learned to kind of get to where I am now.
So but experience still matters into the day.
I think there's a lot of things. I think people don't think through the business model a lot when they think about businesses. I think they'll come up with all sorts of harebrained ideas, but just doing basic things like the back of the envelope calculation of what does it take? What does it take to get $1 million in revenue? What sort of organization do I need? How many staff do I need? People don't think a lot about things like sustainable competitive advantage. What is the thing that we have that will continue to let us to win into the future, right? So a lot of people think about one-shot wonders, gadgets and so on, that they're not really sustainable businesses. And I think the amazing thing is we live in a world today where the whole wealth of human knowledge is online, right? If you want to go learn something, it's all out there. So I think that people have to a lot more just get out there and just educate themselves as much as possible, and not think of education as a chore, but as something that really makes themselves get to the next level, right? And it's amazing. Go to Udacity or Coursera or any of the Growth Hacker TV, or it's just everything's out there now. This didn't exist before, right? And I think you just need to take advantage of that.
Yeah, right? That's awesome. Well, Matt, this has been an incredible interview. People are going to get so much from this. I'll end with the question I always end with, and I might know how you're going to answer it, but I'll leave it up to you anyway. What's the best advice you have for any startup that's trying to grow?
Just try a lot of things, measure everything you do, and keep doing the good things and cut back on the bad things. And make sure always it's statistically significant.
Yeah, well, that's great advice to end on. Matt, thank you so much for coming on Growth Hacker TV.
Great, thank you very much.